Good afternoon, ladies and gentlemen, and welcome to our 6-minute video series. This is where 6 minutes can save you hundreds of thousands of dollars in capital gains taxes while earning you substantial income for life. This is the perfect retirement solution for landlords and a way to avoid the capital gains tax on your personal residence. This is week 17 in the series. We're going to be meeting our CPA Ruoyu on Thursday, April the 10th. I'm going to give you a little bit of information about her here. She's what I'd like about working with Ruoyu is that she is very familiar with 1031 exchanges, Delaware statutory trusts, or the DSTs, and the REITs that our clients are finding so attractive in avoiding the capital gains tax. Before we continue, I just want to say that you may know us through our monthly newsletter, the Senior Homeowner Times, some of the books that we publish, Best Cities in the West, Senior Housing Simplified, and Help at Home. For those of you that are determined to stay at home for as long as it's safe to do so, this is a great resource. And to subscribe to the newsletter or to get a copy of any of the books, just call that number there, or email us at info@seniorhomeownersolutions.com. Also, lots of resources for seniors on our website, www.seniorhomeownersolutions.com. And our latest book, also free to you for the asking, called Avoiding the Capital Gains Tax, Doubling the Income on Your Rentals. Just call us if you'd like a copy. All right, I just want to advise you that the presentation today is for informational, educational purposes only. Please consult your own experts, attorneys, accountants, etc., before utilizing any of the strategies presented herein. So here's a simple question for you. If you don't do a 1031 exchange, what would your capital gains tax be? Well, you can do this on the back of an envelope, just very simple math. Let's say that your net selling price after your selling cost is going to be about $4 million. And let's say you purchased it for $100,000. So put that number there. Take away any improvements that you've made. Let's say you've made $200,000 in improvements over the course of owning your house. So your gain then is the difference between those, or $3,700,000. And if it's a house that you've lived in for 2 out of the last 5 years, then you can take the $500,000 exemption if you're married filing jointly. So your taxable gain would then be $3,200,000, and estimating a federal and state tax of about 38%, your ballpark estimate would be about $1,200,000. Please check with your own tax professional for your own specific amount. Okay, so if you do a 1031 exchange, what do you get in exchange for the equity in your house? Well, one option is what we call an STNL, or a single tenant net lease, like these photos here of Bank of America, KFC, McDonald's. The benefits are that you're the total control. You're the only owner, and you're in total control of this investment. We only recommend those with long-term leases and corporate guarantees, so you're never worrying about the rent. 5% cash return is pretty typical, and that's totally passive because the tenant is responsible for all of the repairs and the maintenance of the property. You get to do nothing but collect the money. Another option for you is a REIT. So in a REIT, basically, you're going to own, instead of owning the real estate itself, you're going to own a company that owns the real estate. You're going to own shares in that company. The benefits there are that you're highly diversified because these companies own millions and millions of dollars of real estate, and you just own a tiny bit of it, shares. Also pretty typical is a 5% cash return. Again, totally passive, no more management headaches. You get appreciation on the value of the assets. So to learn more about these REITs and these single-tenant commercial properties and how you can exchange into them, saving yourself hundreds of thousands of dollars in capital gains taxes while converting your equity into income for life. Join us next Thursday, April the 10th at 5 o'clock. You'll get to meet our CPA, Ruoyu there. For new clients, you can schedule a free 15-minute introductory consultation with her. You can do that even today if you like. Just click on that link there. Or you can ask short questions of her at the event. So, any questions? Email any of your questions and allow us 24 hours to reply. If you'd like to discuss your own situation with us, call that number there or email us at that address there. I want to thank you for your time today, and I'll see you on Zoom at 5 o'clock, Thursday, April the 10th, for the complete presentation with Ruoyu Loughry present. Thank you for your time.